Good afternoon, everybody. And welcome to the weekly call. It's the 1st of July 2019, slightly later than normal. The reason for that is we had G20 over the weekend, so I just wanted to take stock of how that was going to affect the markets, and then allow me to sort of create my hot list and plan my trade plans for the week. So I'm going to get straight into it. There's pretty similar to last week. My hot list is quite similar to last week. The reason why there was not much activity last week is we were leading into G20. I did take one trade. I took USD CAD on the bounce. I got stopped out for 1 pip, which was unfortunate, but I did then take the position again, expecting to go break even before the weekend. That didn't happen, so I closed it out for a very small profit. I then re-entered that trade on the pullback last night, and we did see some strength in the dollar this morning, but I decided to then pull out of that trade for a small profit again, just because it's Monday, it's the beginning of a new month, and it kind of, let's just have a quick look at it. It looks like it's going to maybe touch this moving average, 8-day moving average. Bearing in mind we are in a downtrend on this, so we have got some nice price action here warranting along, but I'm just keen that this area might get touched. So I've set an alert here, and then I'll get another retest to sort of this area of interest here. Sorry, just trying to stop that flashing up, to which I would then look to take along if price rejection confirmed that. So I just want to be careful. I was expecting some big momentum, as you can see. If we just zoom in on the lower time frame, we may get that. I may miss this, but I'm just aware of this area of dynamic support and resistance here. So for the sake of, a few pips, I just wanted to come out and maybe get a second or third attempt. That would give us better confirmation that this is going to go long, and it would also give this chance to come down to meet this sort of area here. So yeah, just being patient with that one. So going back to the top of my hot list, we've got Euro USD. So as you can see here, this is broke through this support area. It's broken through this moving average as well. So what I'm looking for here, I'm just going to be patient. Let me get rid of this. Just bear with me a second. Sorry about that. Right, so as you can see, we've got indecision, indecision, indecision. So we've got various dojages there. Let me just hide this. It's popping up. So we've had a break through this resistance level. And bearing in mind we're in an uptrend, so I've drawn a fib, and we're looking back to a retracement about this area. I would then expect we get a pullback again, and then a continuation to touch this trend line before we then set off and go long. So I may be looking at taking a short position, a short-term intraday position. If we just drill into the lower time frames, it's already beginning to do this. So if we look at this again, what we've got is we've had a test of this support area 1, 2, 3 times. We then broke through this, which is great. This is what we're after. So what we then look for is price to come back to test this area of support that now becomes resistance. And then I'm looking at sort of a touch of this area, and then we're going to come short again. That's what I'm looking for with this trade. I've got an alert, as you can see, set just below that. So what I'll be doing is monitoring price action around this level. So that's Euro USD. So just to summarize that, what I'm looking for is really a long-term trade to the upside, but we're not in that setup yet. There could be a week before that, or maybe 2 weeks before that materializes. So what I'm looking for here is, like I say, price rejection, and I'm looking to take a short-term intraday trade, possibly to come out around this trend area, and then I will take that trade out and then look for price rejection on this area for a potential trade to the upside, and that will be a more longer-term trade. So that's Euro USD. We've got Euro Pound as well. So Euro Pound. So if we look at this on the weekly time frame, we've got a nice weekly trend here. Last week I said that it's very likely to come back. Just bear with me a second. It's likely to come back and test this area here before we get a rejection. So this sort of red area marks out that kind of zone. As you can see, in the last 4 hours, we've had bullish engulfing, and now it looks like we've got a continuation. Very choppy. I'm not interested in getting involved yet until I see solid confirmation that this is going to come short. And unfortunately, with the weakness in the pound at the moment, it's, technically it looks great. Fundamentally, we've got, weakness in the pound. So this could very much sort of hover around these areas here and then grind its way up, break through, and then we see a continuation. So I'm very much sat on the fence with this one at the moment. But as you can see here, we've had, how many pips is that from this area? Nearly 500. It'll be close to 500 pips when we get to this area. It's due a pullback. It's gone literally straight up. Look at on the daily as well. We've had a very small pullback here. It's due a significant pullback. Even if it's going to go long, we will be looking at. Let's draw a fib on there. Let's say from this level. I'm not sure, drawing that wrong. Give me a second. All right, start again. So on that weekly time frame, we'll be looking for a pullback around the 87.40 level potentially. See, I like to keep the fib nice and tight. What I like to do is draw the zones around the 50% area and then monitor price action around that. It's price action that I go off for taking my for qualifying my trades, but I do use the MAs and the fib retracement really to give me an idea of where it's going to pull back to, my area of interest. So I still think this is going to push up higher. It's seeming so, but again, I've set alerts. Let's have a look. Where's that alert gone? Oh, there it is. So my alert's set at this level here. I might just nudge that down a little bit. And I'll be monitoring price action around there. So you can see how I use the charts, I use the fundamentals really to set up what I would expect to be, a good trade opportunity. And I use price action if the so if the price moves within that sort of band, I then use price action to gain confirmation to take my trade, whether that be short or a long trade. So Euro NZD. So as you can see here, we've had a nice bounce off. This isn't a trend line. So when this candle formed, none of this data existed. So, you can't draw this trend line and go in hindsight, wow, look at that. We've got a evening star formation with a very bearish close to the week. Well, that's great. So what I've done is, since this formation occurred, I've now drawn the beginning of a trend line. Now this isn't a trend line at the moment because it needs to touch 3 times. So 2 touches, great. It's very likely we're going to get another touch. So with this, you've got to tread carefully. I'm expecting, although we have already broken out of this area of support here, we may well, and this is looking quite bullish, we may well break through and continue. And that's why I would expect after such a big move last week. And also with the data coming out of G20, we have got quite an exaggerated price. The market's moves are quite exaggerated at the moment, and this is why you must tread carefully on a Monday, especially after such an event, because the market needs to take sight of what's happened over the weekend, and the data is still filtrating through. So we have got the potential of extreme volatility occurring over the next, well, today and tomorrow. So this is why I've taken a step back, and I'm just analysing this over the last week and this week. Because like most retail traders, you are enticed to jump into the market and only to find that the market moves against you. So it's best always to be patient. Sometimes it's good to know when not to trade. 2 seconds, let me look at that. So as you can see, this is making quite an aggressive move to the upside now. So that alert's gone off. Just move that up to there now. So as you can see, I just moved the alert to follow the market. So the market tells me where it is and then reset the alerts so that I can monitor, let the market come to me basically within these boundaries. So let's go back to New Zealand. Bear me a second. Sorry about that. Yeah, because I'm doing this live. Obviously, I do have alerts going off, so I just need to pause it every so often while I react to my trade plans. Right. So what was I saying before with Euro and New Zealand? I was talking about this may well break above this area of support. So we've just had, potentially got a fake out occurring here. This is where the market breaks out of an area of support. Now, what you're looking for is for that to retrace, give solid price rejection, and then a continuation to the downside. But what can happen also, especially after a move like this over the past week, you got to think about this as a seller. You're not necessarily going to be wanting to get involved with the breakout here just because it's support and resistance. Here, yes, but you've got the 200-day moving average sat right under this pin bar, so it broke through, it's come back to test it. So for me now, I would be expecting a pullback to sort of this area. So if I drew this last week, so I just adjust it slightly. So I'd be looking for a pullback towards this 50% area. I've set alerts on the way, so obviously it breaks through here. I'll then move the alert up and set one below it so I can monitor how the price is moving within this range. And then I will be looking for price rejection around this 50% fib area. And I'll just be looking for confirmation whether it's going to come short or not. So what I do is create my hot list by looking at the weekly analysis first, monthly and weekly. Yeah. So it's a very clear sign here that we've got an evening star formation, a very weak finish to this weekly candle. So with that being said, we're expecting a pullback where the positions are closed to take profit, so that the sellers can return with a better price to continue short again. Okay, so that's what I look for. So that's all set up on my hot list. Next one is Euro Aussie, very similar. We've got a nice, it's not quite a bearish engulfing. It depends on how you want to measure that, but it's still a very bearish finish to the week. So again, in the same respect as Euro New Zealand, I'm just looking for this to pull back. Just give me a second. Having a few technical issues, so just have to bear with me. But yeah, what I'm looking for here, we have a trend line here on the 8-hour time frame. So we've had 1 touch, 2 touch, and this area here, you can see that with this 8-hour candle breaking below this trend, even though it wasn't a confirmed trend line, it kind of is. What I mean by that is if this candle, for instance, this pin bar had touched and then bounced off, then that would be a confirmed trend line. What this has done is broken straight through. But I mean, trend lines, again, they're quite speculative. You know, there's no reason why you couldn't draw it here. Some people like to draw a trend line where the candles touch in a sort of consolidated area, and other people like to put it on a single point. To be honest, it doesn't really matter so long as you get the range. So this is kind of the range for that trend line. So, you know, what's happened here is it's come back and it's kind of broken through this trend line or this range, whether the trend line be here or here, it's still broken and closed below it. Okay, it's then come back, retraced, and blown through it again, and this time it closed. So I didn't get this, but you had a good selling opportunity here for a short intraday trade. But again, what I'd like to do, especially with last week leading into G20, stayed out of the market. And as you can see now, you know, this could have gapped up, this could have gapped down with G20. So you don't really want to be in the market, especially when you've got extraordinary news events occurring like that over the weekend. So anyway, what we've got is this little area of support, giving us a nice doji, and what I'm expecting this to do now is to pop up to sort of this area again, this range, touch this trend to come short again. So as always, what I've done, I've set some alerts, I've put it on my hot list, and I'll monitor price action around sort of this area here. Okay, so that's your Aussie. Pound yen. So pound yen, okay, just bear me a second again. It's quite a busy morning, a busy afternoon. But it's interesting this is happening while I'm on the call, so you get an insight to how I manage. Sorry. As we can see here, it's just blasting straight through. So again, I want to move this alert. There's no opportunity here. You see how choppy everything is at the moment. This here would give you an indication that you could go short. 200-day moving average. Pound's obviously weakening off massively now. This will be off the back of the CPI data this morning. So all I want to do, it's very fiddly there, move this to here now. And this is all I do, guys. So yeah, clearly Euro's gaining some strength. I'm just going to pause this for a moment. I just need to have a look at what's going on and just adjust my indicators. So I'll come back in about 2 minutes. I'll just put it on pause. Okay, sorry about that. So yeah, there's strength coming into the euro, and all that is doing is moving the price towards the areas of interest that I've got plotted out on my hot list. So again, just to highlight what I'm doing, I'm just setting alerts in the range before the area of interest is hit by the price. And then as those alerts go up, it brings the market to me. So I then have a look at that currency pair, have a look what's going on with price action. If I'm not seeing any type of price rejection or I'm seeing continuation, I just move the alerts back up a bit. And I continue to do that. And every time that alert goes off, whether it be below or above, I then look at price action again. And at some point, you do get confirmation, and then you can make a decision whether to take a short or a long position. So that's how I manage, that's how I keep my eyes on the market. So going back to pound yen, now what you saw here is Let me just get rid of this fib. It's not relevant now. So I think my bias for this, and I'm sat on the fence with the pound pairs at the moment. We've got continued Brexit concerns. We've got the final votes for the UK Prime Minister coming up over the next few weeks. And we just simply don't know what is going to happen. Now, if you look at it technically, most of the pound pairs, we've got a bit of pause in the market. We cannot take away the fact that this is a very bearish month back in May. We do have this doji, this indecision. Now, the reason why it's on my hot list is if you look at this area of support here, the next step down, is quite a considerable way. And it's, unless something catastrophic happens, I can't see, sellers coming in for an extra 300 to 700 pips, 300 to 500 pips. Brexit's been going on for some time now, and I kind of think if you look at the longer term picture, we are making higher lows. So I just think about what I was saying then. So yeah, we had the bottom out here, we've made a low here, and then this low is higher than this low. So, we may well come back to touch this trend or confirm this is a trend and then continue long, maybe. But this is more of a longer term trade. I want to be looking at this more on an intraday level. So for me, the internet's running a little bit slow. For me, what I'm looking at is for a pullback to this sort of highlighted intraday trend area on the 4-hour time frame. I'm waiting for this alert to go off. I'll sort of monitor price action again and then see if we can get a continuation. I will look to be coming out though. If you look at this moving average, it's going to be very difficult for it to push by this area here. But if you look at the risk to reward, 136 pips, with a nice tight stop just below this sort of area here, 12 pips. So call it 20 pips. It's a good risk to reward that. So that's pound yen. So that's on my hot list. Next is pound USD. So with this one, I'm just kind of sat on the fence and monitoring this. The concern I've got here is, if we just zoom out, we've got a considerable trend line here that has been holding on. Trading view is quite frustrating sometimes. There we go. So we've got one touch here, and then we've got consolidation with various touches in this sort of area here. So if we just zoom back in on the 8-hour time frame. Yeah, I'm just having a few technical issues. So what I'm going to do going forward is, if there's a little delay, I'll just pause it and get my charts correct and then come back to you. So I have to deal with that issue afterwards. But as you can see here, we've had a breakout from this area of support. We've had a nice strong finish on the 4-hour time frame. So we're bouncing off this area here. Now, I'm interested now to see what happens. Is this going to break, retrace, and come short? So come up towards and test this trend line. Reject from this trend line, come up to test this area of resistance, give us price rejection and a confirmation short. This is why I have an alert set here. I'm just going to nudge this up a little bit here. Oh, I did have it there for a reason. So yeah, I had the alert set because it may well reject from this area here, you see. So anywhere in this zone. So I'm interested to see what happens. Is it going to be a bounce off this trend and continue long? Or is it going to retrace, reject, and then come short again? So I'm not really looking to take a trade with this pair, just because the dollar was quite strong this morning, and I want G20 affected by G20, and the pound at the moment is just quite flaky. I've got no real confidence in any of these pairs at the moment. Pound yen, I'm kind of interested in, but I just want to use this as a reference point because if this rejects, it might give us an indication to what. So if the pound sells off against the dollar, it might give me an indication to what's going to happen with pound yen or any other pound pair as well. So I'm kind of using the other pound pairs as a reference point to see what may well happen. Just another additional layer of confluence to see, if the pound yen trade shapes up in any way. So that's one of the reasons I'm looking at pound dollar. So we've got next on the list is New Zealand dollar. Okay, simply put with this one, have a look at that. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 solid days straight up with no meaningful pullback apart from this sort of area here. Now we have hit this 200-day moving average. Just check that is, and we're currently sat below it. So what I've done is I've drawn my area of concern, area of interest here. I've set alerts above and below. And basically what I'm looking for is price rejection. So, and I'm starting to get interested in it here. If you look at this 8-hour bar, we have got, it's not a doji, but it is a bearish indecision, slightly better than the doji. But I would expect this now to sort of come back up and test this kind of area before coming short again. So I'm not ready to take this just yet, but I am starting to get interested in it. Again, it's Monday. We've just had G20. You can see if we'd have just jumped in on this candle, we've got big price rejection off this area. And I basically want to see this close below this spike, retrace and come short, or push back up, which would be much better. Give us confirmation, making a lower high. Give us price rejection, so maybe a pin bar like this and doji, or bearish engulfing, and then I'd look to take a short trade with a tighter stop, so my risk to reward is much better. So that's New Zealand dollar. Aussie dollar, very similar. What I like about this one, what's happened to my trend line? Spare me a second. Bit speculative this, where to put it, but I guess we could put it there now. They formed. Yeah, so we've got 1 touch, 2 touch, 3 touch. You can see that we've got a pin bar. It is bearish still, but there is no upper shadow. So what we could have here is a slight pullback, a retracement. So 1, 2, retracement forming, and then we could see this breakout above this MA, although it is rolling over, and then continue long to touch this trend and then come short. So again, I'm being patient with this. You have to look at the bigger picture. If you zoom out, you see? So yeah, as you can see here, my concern is it has not come to touch this trend line. Now, it doesn't necessarily mean it's going to, but it does mean I'm going to tread carefully because as you can see on the higher time frame, we've had 1, 2 consolidation of touches there. This should really touch. So for me, with this trend line here, is one I prepared earlier. This trend line here hasn't been broke, although it's only just really confirmed as a trend line. And as you can see, we've got a retracement sort of formation forming here, so it's not ready yet. So what I will do is, this has changed since my analysis this morning. I'll just set an alert. Bish bash bosh. So as you can see, I'm monitoring above and below. So if this alert goes off, I look at price action. If this alert goes off, I look at price action. But if this alert goes off, I will nudge that up. And the probability there is it's likely to touch this green zone, which I prepared last week. So again, remaining patient. And you might think to yourself, well, why? I'm a longer term trader. I like to get, look at the bigger picture. I like to take trades on the higher time frame and use the lower time frame and price action to get the best price. And that means I do less trading, but my risk to reward can be quite significantly larger. So generally it's like 5 to 1, but there are occasions where you can even get like 15 and 20 to 1. Let me just look at oil, just 2 seconds. It's not ready yet, so I'll come back to that in a minute. Aussie dollar, that's where we were. So by being patient, I don't get caught out in whip sways of the market. I don't get caught out in manipulation. What we can clearly see here is we're in an uptrend, which is the secondary trend of the primary trend, which is a downtrend, and we may well just be having a bit of a pullback to retrace to go long. And I may well then take an intraday trade. If it looks good enough, then why not? And then I could just ride that up to there, take the trade out, and then continue short if I get confirmation using price action at this area here. So Aussie dollar, USD CAD. So I said right early on in the call, a reason why I took the trade out this morning is because let me just go to the higher time frame. I think it was. Yes, there we go. We're going to get a bounce off this 8-day moving average. Now, I just wasn't getting the conviction to take this trade. It just wasn't working for me. Sometimes I get a gut feeling and it's just not sitting right with me. And that was generally because it's Monday and we just had the G20. So this information is still being digested by the markets. So there is definitely room for lots of manipulation and misleading moves. So it's best to just let that drama take shape, stay out of the market, and then get confirmation. And if this trade flies now, it does not matter because I've not lost any money. So what I want to do now is move this alert down a bit further because the alert went off before, and just monitor it. Again, I'm looking for this to come back more towards this area of support. And then I'm looking for price rejection. I'm looking for price rejection similar to this, giving me more confirmation that this is going to go long. And if you look at this little channel that I've got forming here, if you're patient and you get the best price, and you're not always going to get these trades, sometimes you'll wait for the best price, you'll get and you'll lose, you'll miss the trade. That doesn't matter though, because there's plenty of others out there. You look at my hot list, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 different trade setups. I'll probably only be looking to take 3 of those because of risk. So, if I miss one, there's another one around the corner. So if you look at this, imagine if I get involved around this area. I've got like a 20 pip. I'd take it down to here actually. So maybe give it a 50 pip stop, wait for it to break this area here, and then move my stop to the 130.60 area, say, or give it 5 pips below. So that's 20 pips. If it breaks this moving average, we should see significant price action up towards this sort of area here. So I can then go to break even. But look, if we take it to the top, we're looking at 200 pips for a 20 pip, so 50 pip initial risk. So the risk to reward is most definitely on your side. And as you can see, we're just getting a bit of sideways movement with this. In fact, we're getting a bearish rollover here, you see. So you can see if I'd have got involved or stayed in my trade, I'd now be probably break even now. So by taking that very small profit and waiting for confirmation at a lower time frame, at a lower level, I've got another opportunity to get a better price for this currency pair. USD yen. Again, I'm quite neutral with this at the moment. I'm just monitoring how this is going to react after G20. So as you can see, I'm just going to look at this on a technical point. We've had a breakout of this channel because of news, and now we are starting to get rejection. So if I just drill down on the lower time frame, two scenarios will play out here. We've got the 200-day moving average here on the 4-hour. This is why we're looking. This is the reason why we're seeing some indecision come into the market. But two likely occurrences: come back to test this area, this trend line. We see price action reject, and then we get a continuation long. The other one is we get price rejection to this trend line again, and we get a close below this trend, and then we retrace back up and then come back short again. And this would give us confirmation, better confirmation actually, it's going to go short. It's called a fake out. And all that means is we've had the news over the weekend that's caused this knee-jerk reaction, and then the buyers take advantage of those gaps up, those moves up. They dump the stock, they dump the trade, and they continue short, which, if you have a look, is the current trend. So we get a trend continuation, but what we'd be looking for is price action around this area, and we'd be looking for a close, come back to test, a rejection within this upper line, and then a continuation short. So again, just going to monitor price action, and that's why my alert's set there. So if this alert goes off, I'll monitor price action, and if it looks like it's coming short, I will move that alert down and then set a new alert above, because I'm not interested in going long with this at the moment. So if this continues long, then that's fine. I'm interested in going long if it comes back to test this area in support. So that's why my alert's set there. So that's USD yen. Oil. So oil is very much on the radar for a pullback. Now, it's just typical that all of this happened last week. It was very volatile. Same with gold last week. Sorry, this is gold, not oil. Oil's below. Looks very similar on the lower time frame. No, it doesn't. Okay, I've not had enough sleep. Anyway, let's go back to gold. So, over the past week, well, the past 2 weeks, we saw a significant strength come into gold off the back of off the back of a weak dollar. Not just the back of the weak dollar, the back of weaker currencies. So 2 weeks ago we had FOMC, we had interest rates, ECB and Bank of England. All were showing dovish signs. CPI data, PMI data have all been quite weak. So it's looking increasingly higher. There's an increased concern now that the global growth is slowing down. So what happens in those scenarios is, the safe havens, commodities such as gold, silver, not necessarily oil, because oil is affected by growth, but certainly gold, platinum, palladium, etc. They do tend to see significant increase. But obviously, with this going up, we haven't had a move like this for a very long time. So it would make sense for you if you've longed this gold from here to here, and look back at the history, we've just not got a move like that for some time. I'd be taking profit. So, and that's exactly what has happened. But the problem with gold is very volatile, and leading into G20 and leading into all the news last week as well, back end of last week, we don't know whether the news is going to be positive or negative. Therefore, gold's going to fluctuate in price up and down. So, I think I did try and take one of these trades, and I got stopped out for 1% actually. So that was a shame. Yeah, I did. So, I did take a strike last week and got caught out, unfortunately, but that's the way it is. So, with gold, I am interested. Now, looking at it from the daily, it would appear that we've missed the boat. But no, not really. What we've got here is a breakout from this. Just move this down now. And I need to move this alert as well. I'll move it to here. Yeah. I'll just put that there for now. Yeah. So with gold here, what we've got is we've broken out of this area of support, and as you can see, we're getting rejection around this area here. It's a little trend line. Just draw that in. I would imagine. Not quite a trend line, but it's an area of interest. And as you can see, we're getting rejection from around this area. If I draw in support and resistance around this area and look at it on a high time frame, you'll probably see that this is an area here, but I haven't got time to do that right now. So what we're looking at here is a breakout, rejection, roll reversal. I'm interested in I'm going to draw another layer here actually. So at the moment, we're either going to break, come back to test this area, so this resistance area, and then come short, or maybe break through, come back to touch the trend, wedge, consolidate around this sort of area here, and then come boom straight down. And that's the most likely outcome in my opinion. But this is my area of interest. Let's just set an alert there. And finally, oil. Very similar, really. I'm just looking for, if I just go on the higher time frame, what I've got here is we've got this triangle formation here. Now, we're sat 3/4 of the way up. Now, we've had quite a big move up. And at the moment, we're kind of hovering around this inner trend line. And for me, you've got there's going to be two ways to play this. Either we're going to come back to test this and go and bounce around in this triangle. That's likely going to happen, but is it going to go there first and then down to the trend, or is it going to come down first and then go up? So again, all we can do is sit back, monitor, and wait for price action to confirm direction. Now, fundamentally, over the weekend, we've had OPEC, we've had positive information come out of OPEC. That's why we saw this gap in the market. Yeah. Now, I'm just going to say something here. Now, you imagine, and some of you have probably been caught out on this. Can you imagine? Look at this from last week. Absolutely beautiful, perfect confirmation. We've got doji, indecision, bullish engulfing, doji, well, indecision candles, and then we've got strong price rejection off this area, and then we've got big selling momentum coming in right into the end of play on Friday. So there'll be people who have shorted this thinking absolutely brilliant, I've got a great trade, I've got loads of pips out, then massive gap up in the morning. The reason why we don't want to be getting involved, especially when we have the likes of G20, is because of exactly this. You're flipping a coin. Yes, the trade talks and the G20 talks could have gone wrong, and therefore we could have gapped down here and you'd have probably bounced off this 200-day moving average. Okay, but we don't know. You know, the whole point of these talks, and as you've seen over and over again with Brexit and Donald Trump, they make friends, they're all pals when they meet up, only to become passive aggressive and start causing, you know, arguing and falling out with each other and whacking tariffs up just a few days after, you know, the champagne's worn off. So, you know, you as a professional trader, what you don't want to do is worry about missing an opportunity. If you analyze the charts every single day and you do your research, so you know when the news releases are coming out and you've got a high level overview of what that data is made up of, whether it be positive or negative, you've got the right information to start, I guess, setting up a high probability setup. So what I mean by that, if I just walk you through this, look what's happened. All I'm interested in at this stage is price action. Yeah. 2 seconds. So we've had a strong move up. We've had a continuation. Yeah. So for me, looking at this just on the weekly bar, you've got a high probability that this is going to continue long towards this outer trend line. Yeah. It's kind of backed by fundamentals at the moment. We've just had some positive information come out of OPEC, but that's then offset by global growth concerns. So this is why we saw some indecision the week before. And we've not really had that much of a move today. And that's really because they're just taking sight of this gap. You know, gaps tend to get filled. And such an aggressive move up as well. So the buyers have missed the boat. Yeah. So if you just look at the current price action now on the 4-hour time frame, so just to recap, the reason why this hasn't set off and taken off is because of this gap. Yeah. There's a psychological barrier here that's preventing buyers steaming in and taking it straight up to here. Fundamentals are backing it. It's offset somewhat against global growth. We've just had weak data for the pound come out earlier today. Yeah. So there's the market's taking that into account, but it has also come back to test this trend line. So this is on the 4-hour time frame, and this is my area of interest. Now this is an area of interest if it was underneath this line to go short, or an area of interest to go long if we get price action breaking and closing above this trend here. So I'll most certainly be waiting for the next 4 hours to close, which is in about an hour from now. If I drill into the lower time frame, again you can see a pin bar forming. 1 hour. Again, we've got some rejection. This could now retrace. And you can see as you drill into the lower time frames, it starts to take shape. Now we've got a gap up, a breakout, come back to test and go long. So this is a retracement for me. So what I'm going to do here is I'm going to move this down from last week. I'm going to move it. I will move it just above this level here. So I'm interested in this spike up. So this obviously acted as an area of support. Resistance. and we're just slightly underneath that now. So I'm interested in this breaking, and then you'll get some kind of confirmation here. So it'll consolidate, give you this kind of retracement compounding effect around this area, and then I'd look to go long if it breaks, or on the break of this candle here, with my stop loss being underneath this trend. So what would we have? We would have a 70 pip stop, which is pretty good for oil. Just give me a second, I've got technical issues again. And say 250 pips reward. So potentially a nice long trade forming there, but again, we need to be patient. But hopefully you can see how I have used price action, gone from the higher time frames to the lower time frames, set my trends, my alerts up, and I'm letting the market come to me. And if it doesn't meet that criteria, then I'm not interested. And if it doesn't meet that criteria and goes long or short, then I've missed the boat. It doesn't matter. It doesn't matter. There's plenty of opportunities out there. So anyway, sorry that's been quite a long call. It's 50 minutes long. But hopefully that has given it an insight into what I'm looking at for the week. Feel free to use this as a blueprint. Like, again, these aren't trade signals. This is the blueprint, my blueprint for the week. This is what I'm looking at. And I just comb through the markets on a weekly basis. I do it midweek as well. But if you get your hot list right, you set your trend lines, you set your support and resistance up, and you get your alerts set and let the market come to you, then the market tells you what to do next, rather than you constantly combing through charts trying to find trade opportunities. Now, you can do this on the lower time frames. You know, I just choose to do it on the higher time frames. But this is very much transferable. This process is not really my process. This is what I've been taught of various mentors over the past 10 years. But really, just to summarize, there are various strategies out there that may well work for you. For me, I'm a longer term trader, a swing trader, and I use price action to sort of guide my entries and exit points. So hope this video has been informative, and I'll speak to you midweek.